Hi, welcome to the S&P Capital IQ Q2 Asia Pacific Capital Markets Update. My name is Vickesh Mistry. I'm an Associate Director within the Application Specialist team based in Sydney, Australia. Today I'd like to give you an overview of the key highlights and from our recent webinar and presentation. Specifically looking at three key markets within our region: China, Australia and Japan. I do want to start first of all with the Australian market. Here we see overall M&A deal activity from a volume and value basis actually down on a year-to-date basis versus 2014, approximately 8% down. And this is mainly due to the stellar performance that we did see last year. However, this has been powered by an increase in activity in domestic M&A transactions, and this has been primarily driven by activity within the telecom sector. One of the themes of particular note is that we have seen pension money involved in outbound M&A activity, and this bodes well as that represents a significant amount of capital to be deployed outside of the domestic economy. Here the rationale is that the pension funds are looking for higher yield and lower correlation assets. The second market that I want to focus on is China, arguably the most significant market within our region. Here the key trend has been around buyouts of companies within the internet and e-commerce industries. Specific examples are Keyho and Focus Media. Here companies are looking to take advantage of the recent equity market bull run that we've seen in China by delisting their overseas listings and bringing them back to the domestic market. In tandem to this, we obviously have experienced the recent turbulence and high volatility within China's equity market, and we're yet to see how this might impact the buyout trend overall. On a more positive note, we do see a significant boost in M&A activity within the consumer discretionary sector. It is up 400% on a year-to-date basis, and this bodes well from a policy reform perspective, as it's a clear sign that the economy is moving towards a more consumer-driven basis. Our third market in focus is Japan. Here we see overall trend growth within M&A activity showing positive growth, 3% on a year-to-date basis versus 2014. And this has again been driven by a number of significant deals. There has been the Japan Post acquisition of Toll Holdings alongside the Tokyo Marine deal of HCC Insurance. And overall, we expect to see this trend continue throughout the rest of the year as Japanese corporates look to strengthen earnings and growth through acquisitions outside of their domestic market. For more information around our capital markets update, please take a look at our recent webinar recording and presentation, and thank you for your time today.